Hi, this is Chris Buss with Traders Profit Compass with a closing market wrap for Thursday, September 10th. First off, on this afternoon's mid-session update, I certainly hope that reached you with enough time to have some actionable content. Things really started moving fast there at the end, and I haven't fully factored in the time it takes to render the video, to upload it to YouTube, and then to get it out to you. So I'll try to do a better job going forward of pulling together my thoughts ahead of time and try and front run the market as best I can to give you, that content in time for it to be actionable. And if it reached you late, my sincere apologies about that. I'll try to do a better job, but I hope you got something useful out of it this afternoon. What I'm going to do now is go over what I always do lately, anyways, and that is the indexes and the FAANG stocks. I still think it's the market key, just because of the cap weighting, and this has been a tech-led sell-off. I think it's wise to stay focused on these names, not only because I think there's good money to be made if you're an active trader on these, but also just for sentiment reasons, and they are leading to the downside. So if we can get the FAANG names right, I think a lot of other things will fall into place. So let's zoom out. I'm going to go through the daily charts and then the 30-minute charts on these names. For you swing traders that are on the daily time frame, I think it's important to have a perspective on where the major market indexes are. Not only if you're trading SPY in the indexes, but also in your individual names. 75% of a stock's direction is going to be dictated by the market. So no matter if you've got the best stock in the world, if SPY is going down, and I don't mean down like crashing, but just directionally down, it's going to be tough for long trades to work. And it's the same thing on the flip side. During this run-up, there's been a lot of bear setups that just don't work. And that's what you start. That's your tip-off that you're wrong. When you've got perfect bear setups that fail. And the tide is starting to turn now, where the breakouts that have worked, for 4 or 5 months since the bottom, the breakouts that have always worked are going to start failing if this sell-off proceeds. So it's important to get the directional, the market direction right in order to make the most of the trade setups that you want to trade. And if we move forward and sell off from here, you're much better off focused on short ideas. And if you're not comfortable shorting or buying puts, simply to step aside on your longs and then buy the same names back again when we're down towards the 200 or wherever we decide that there's a bottom. But it's silly just to let your gains evaporate if we're in a market correction. So let's take a look at it. SPY. We had the sell-off. We dropped below the channel. A couple days ago, after the Labor Day holiday, we guessed right and we held short over the weekend. We came down for a look at the 50, which held, and then we got a 2-day bounce to back touch the bottom of the channel, which failed today. And they closed it right down near or at the prior lows. So on this chart, on the daily time frame, you simply focus on the 50. The 50 EMA is at 331.70. If you see tomorrow or in the days ahead that 331 fails, we're going to be coming down to this 320 area on the chart. Now there is a little support ledge. I would call it minor support at 327. But I think if the 50 breaks, that little 327 ledge is not going to hold. It's going to come down here to 320 and probably on that initial hit bounce to a certain degree. But then that'll be the next key level that'll have to hold. And you can see the 200 here is at 310. So the focus on the daily time frame is the 50 EMA at 331.70. And we'll see if it holds. And that's going to be your key. And as a reminder, if you're a first-time viewer, there's a lot of funds, a lot of quants, a lot of algos that have been set up on momentum this whole time, that their mandate is to sell on a break of the 50. So by mandate, they have to. It's not a question of a guy sitting there deciding, wow, should I hold on or should I sell? They have to. And so I wouldn't be surprised if this breaks that we wouldn't see an accelerated move to the downside if and when this 50 EMA breaks. So keep that in the back of your head. It may go fast if this does in fact break. We can see here on RSI, we are now below the 50, and that's the bearish regime, okay? We can see all this time coming off the March lows. Once we broke above 50, we've held it every single time. This was a little dip at that June low, but not much. We broke below, came back, and found resistance here at this 50 level and rolled over late in the day. And you can see here on the momentum, we're starting to get that separation between the signal line and the PPO line, and this downside is starting to grow here on downside momentum. A very bearish sign would be if this PPO broke below the zero line. And if you saw that happen, we'd most certainly be below the 50 on price. So keep your indicators front and center. They do help inform what's going on with price. Zooming down to the 30-minute chart, you can see we came down and tagged this prior low from Tuesday, I guess it was. We came up, I've removed the gaps that have been filled. We filled that gap up to 342.50, and then we rolled over, and they parked it right near the lows of Tuesday. So this 333 is going to be critical tomorrow morning. We've got this gap down here at 331. That lines up well with the 50 EMA on the daily chart. Don't be shocked if there's a little bounce. If you get a bounce back up to 333 and you're not in, I would fade that. I think it's going to come back down and make another run at this gap. And if this gap fails, I think that programmatic selling will just fill that gap and then come down to this next gap at 327.73. And then we'll see if that one fills as well. And if you go back on the daily chart, and I don't have them all marked in there because it makes the chart really messy and hard to see, there's a ton of downside gaps that'll eventually get repaired. I have no idea when or how, but they'll get repaired at a certain point. It could be, 3 years from now. We don't know. But open gaps tend to get filled. And one thing nice about what has happened with that technical move higher, what I like to call it is finishing business. Revisiting the scene of the crime, an open gap where the breakdown occurred, go back for another look, make sure it was real. Once they get that double check, then they pull back away from that level. And you'll often see that on a breakdown of a key level. You'll get a breakdown, and then you'll get a back test, and then it fails again. So if you're watching your individual stocks and you're trying a bearish play, and you jump on that first move, don't be surprised if it comes back for a back test. And if you're looking at a chart that is broken down, that initial breakdown, and you're not in, don't give up on the stock. Keep watching it, and if you get that back test, that is a prime entry point. It's the same thing in reverse on a breakout. A lot of times you'll get a breakout, and then it'll come back to where it broke out for a back test. And if you miss the first chance, that's often a great entry point for a long. So tomorrow, 333 is the key. If it breaks, look for more downside. If they were to ramp it back up to this 338 level, I would be a seller of that. And tomorrow, we'll have a video tomorrow after the overnight action to see where it sets up in the morning. But if there's bad selling, if it's a big red day, remember what happened last week on a Friday. We had a lot of selling. It doesn't end on a Friday. Lows aren't made on a Friday. They're made on a Monday with follow-up selling. So keep that in your mind tomorrow. If we do in fact get bad selling, the default position should be follow-up selling on Monday. So just for positioning wise, that's how I would be set up. Let's look at the Qs. They sold it off. They tagged the 50. They bounced it. These moving averages served as resistance because now they're on the decline. Then we got the sell-off, and they came back to tag that 50 level again. No surprise, keeps everybody in the game. The dipsters still think they're right, trying to buy the 50. It's worked every time since the beginning. They'll keep trying until they're proven wrong. So everybody's still in the game. The bears think it's going to break. The bulls are buying that level because it's always worked. That level is 270.60. I've just rounded that off to 270. On a break of 270, I would expect some type of a flush move, significant downside break after having tested that twice. Usually the second time it doesn't hold. The first time it usually holds. You get a bounce. Second time it usually fails. So I think that's our bias at this point. If they were to somehow bounce it tomorrow, I'd certainly be trying to fade 285 if they made it that far. I mean, that's a $12 rally. I don't see that tomorrow. I think right here, if you're not in, I think you're just watching this 50. If it breaks, that's a great line to shoot against for a move down. Same thing here on the RSI. Look, all this time, going back, after the March lows, it's been clear sailing, everything above 50 until it wasn't, which is right here. And same thing, we've got a high level crossover, bear cross on momentum. You can see the downside momentum is still growing, still accelerating. Watch this 0 level. That will be a key point when the signal line and the PPO line reach 0. How does it behave? Does it flatten out for a correction and come back up, or does it slice through for more downside? Looking at the 30-minute level, what I've done here is, if you'll recall, there was a big gap. It closed the majority of it. There's still a little slice up here that remains unfilled. We've got our 270 level down here at the prior low. They closed it a little bit above. Tomorrow, we need to be ready for, a kickback to 275. If you got that, I would be trying to fade it with a stop just above. If they break it above, then they break it above. That's all I can say. If they want to ramp it into the weekend, they're going to do what they want to do. I don't think that's not my base case. I think tomorrow there's going to be some selling pressure against this 270. If it breaks, we've got a gap here that needs to get filled. And if it fills on a Friday afternoon and we're below 270, I think you're going to come into the low 260s, 262, 263, 260, down in that area. So everything keys off of 270 tomorrow. It's plain as day. As long as they hold it, they hold it. But if they lose it, then you might see that programmatic, oh my God, buying the dip isn't working anymore, and everybody trying to hit the exits on a Friday afternoon. And just like SPY, if it's a bad day tomorrow, it's going to be worse not worse, there'll be more selling on Monday. IWM, again, perfect setup. Finished right at the lows, right at this 150 level that we've had our eye on the whole time. Came up to this 154, got rejected. Now it's right down at key support. You can see over here on the volume over price bars, massive air pocket. If I backed up the chart, you would see key support coming in here at 147.50. If we get a break tomorrow of 150, and of course if this breaks, or I should say, if the Qs break and SPY breaks, this is breaking. I think there aren't any easy trades, but this is an obvious trade. You got to get short below 150. As long as it holds, then the bulls remain alive. If this 150 breaks, puts a big dent in the bull case for short-term trading, I think the bears would take control there and push it down towards 147.50. SMH, briefly, again, good instructive lesson for you aspiring chartists. A lot of times when you're coming up and you've got declining EMAs, those act as resistance. And that's what exactly happened here. The declining 8 and 20-day EMAs acted as resistance, came up. Price was actually up about 1% in the morning and gave it all back and a little more. Closed right on the 50. Tomorrow, if the 50 breaks, I would assume this 162.5 would break. And then after that, I think you're moving down towards 150. You can see that there's a price void in here. We've got a decent sized volume over price bar. I think 150 would hold on that initial tag. And if we were to get, I doubt that's going to happen in a single day. But if there's significant amount of selling, into that Friday close, I think Monday there's a possibility of that flush move coming down to 150, which I would assume would hold. Facebook, critical spot, top of this wedge. Now we're at the bottom of the wedge. If dipsters are going to come in, they got to come in tomorrow. Here's the 50 right below. They've got to step in here, or the daily signal on Facebook goes to a sell if it loses this uptrend line. And right below it is the 50. Here is a spot where the dipsters, if they're going to do it, they got to do it tomorrow. They got to step in and buy the channel low. If I was a bull, that's where I would be buying, right there. And once that, if it does break and loses this 50, then we're coming down to fill this gap and looking at much lower prices. You can see the PPO has just rolled over here. Notice that this high right here was a divergent high. We had higher momentum back here than we did at the peak. So that was an early warning signal that a trend change was, I want to say, imminent, because there's been other divergent highs that haven't panned out because of the strong bullish trend. But this time it did, and now we're back at the bottom of the wedge. Ultra key spot for Facebook. On the 60-minute chart, we had talked about this 273.20. I think we sent that out. I hope it got to you in time. We were talking about that at the mid-session update. That broke, resulting in a quick move and a gap fill down to 266.50. You can see that it tagged it. So now this gap is filled. This layer here at 266.50 will still be support tomorrow. And if that breaks, then you get the move to 260. And I think that would happen pretty quick. That would probably mean everything else is selling off at the same time. If there's some kind of morning rally and it comes back up to 273, you got to fade that. Look at all this resistance here. I would be surprised if it can punch through this 273.20 again and get back up in this range. You've got all the declining EMAs there that are going to be resistance. But that's why you put a stop. If it comes up here, you try to short it and you're wrong, you get a paper cut. No big deal. That's trading. And then you just step aside. So watch this 266.50 if you're not in. If you're active and that breaks, we're going to get a move down to 260. And that would also mean that rising wedge will have broken. So that would be a significant move just because of the daily chart here on Facebook. Apple. I think Apple's in real trouble for a number of reasons. I think there's a ton of trapped people up here. We had talked about this kickback to 120, a back test of this trend line. That's exactly where it failed. I think any kind of material bounces, there's going to be a lot of sellers up here. And I would be surprised if it can actually recapture this 120 level. If there's some kind of big rally and it comes back up here to 120, I'd try to short it again. I think they're going to have a lot of trouble there. I think this whole thing was a fake breakout. Now that we're below both the breakout level and this trend line, we're still above the 50. So keep that in mind. But this 110 level, if they're going to bounce Apple, it's going to be at the 50. We haven't touched it yet. That first touch may result in a bounce, but I think at the end of the day, that ends up getting faded. And it's nothing against Apple. I mean, good company and all that stuff. But below this trend line on the daily chart with RSI below 50, momentum bearish cross, down, back test, fail, you got to be bearish. And you got to be looking to fade whatever fake rips that they throw at us, because the mode now in all of these stocks is make price prove it. If there's going to be some kind of a bull move, make price prove you're wrong in being bearish. Make the market prove that it can take out this 120, recapture the trend line, and go off to God knows where on the upside. But right now, the bulls got to prove it, right? During this whole run, the bears had to prove it, and they never could. But now, the bears have the ball. So the bulls got to prove that they can take it away. And at this juncture, there's no evidence that they can do that. Moving down to the 60-minute chart. Remember we talked about at the mid-session update, excuse me, very weak RSI and PPO action. We had the down move, very weak bounce, and now we're rolling over well below the zero line on momentum. We've got price down here at this 113.50. Let's see where it closed. 113.42, 113.50, right in there. That prior low has been tagged 4 times. 1, 2, 3, 4. And it's held. If that doesn't hold tomorrow, we're coming down. And let me go back and look at this. Oh, it was at 110. 110 was the 50 EMA on Apple on the daily chart. We're going to come down to 110 tomorrow if this breaks, and it's going to hold. Okay? First tag of the 50, I doubt you would see it just slice through like there wasn't anything there. I think 110, 109 right in this area will hold. You might see a momentum overshoot that runs down to this gap. I think that would hold, and then they're gonna close it right on the 50 tomorrow. Tomorrow if they sell off, they're gonna close it right on the 50 and keep everybody guessing. Now I want to point something out to you guys. If you've never traded Apple in your whole life, I want you to make note of this area right here. There's a gap starting at 108. Takes us down to 106. There's $2. This is the only price action. These few little bars right here stopping this from going to 96. Okay? If you see a break of 108, I think there's $20 of downside in Apple, down to 96. What is that? $22? Or wait a second, $12. Get my math right here. Yeah, 98 is $10. And then two more, that's 12. My bad. $12 of downside, down to 96. We got a gap and then a bigger gap, and literally nothing. I mean, this is nothing. Okay? I think it goes pretty fast. Once the 50 is gone and it moves into this massive void, you got to be short. Even if you've never traded it before in your life, I think you got to take a shot there, and that's just too big an opportunity to let pass by. You set your stop at 109 or 110. You go out in time and just let it go. Make the bulls prove that they can recapture these levels, and if they do, okay, be ready. You know, you were wrong if they break it back up above 110. But after that 50 goes into this massive void, there's a lot of downside there, and I want you to be ready for it. Amazon, I mean, really remarkable price action. If you really break it down, what has happened, we had a perfect comeback to this 33.35 level that has been on the board forever. It closed its gap, which I have removed, and it waterfalled. Once it closed that gap, boom. We talked about at the mid-session update, if it lost 32.50, you had $50 of downside to 3,200. If that broke, you had another $50 of downside to this 31.50. They stopped it halfway through. Tomorrow, you can key off at 3,200 and 31.50. I assume that they'll bring it down to 31.50 for yet another check of the low. And then right there, you'll have a decision point on, does it hold or does it break? If it breaks, you're looking at 3,100 and then 30.50, another $100 there. So that's what I'd be keying off of tomorrow on Amazon. And I mean, these levels, they've been remarkable. You know, here that 3,200 level served as resistance, kept it pinned down, gapped higher, went up, and that was the rest of the story. So you can use these levels to your advantage tomorrow. And I want to make this point for you option traders that are out there. You probably already know this, but I'll make a point. On a Friday, with weekly options that expire tomorrow at 4 o'clock, you can make a tremendous amount of money if, this is a big if you get a unidirectional flush type move. Amazon options will never be cheaper than they are tomorrow. Just as a general rule, because there's no time value. Yes, the implied volatility will be jacked because of the selling. But if you were to get a break of this 31.50 level and you get that move $100 lower, that's a lot of money. That's a lot of money. So treat it like a lottery ticket. Be smart about it. Don't try to retire tomorrow afternoon. But if there were times where you've got an objective shot and a reasonable chance of a unidirectional move like tomorrow, if somehow they flush this thing, you can cash in on that. Just watch your time, watch your levels, and if it doesn't break your way, just get out. Have your game plan all set up before it happens. If you see the move, jump on it. Play with money you can afford to lose, because there are no sure things. And one big green bar, will change that P&L really fast. So I throw that out there just because tomorrow I think there is a decent chance for a trade like that to really work and work in a big way. So think about that. Be smart about it. Don't be stupid and try to make $1 million on a Friday afternoon. But it may be a great opportunity if you've got a little money that you can use in that fashion. And if it's not your thing, I respect that as well. There's lots of ways to make money in this market, and the thing that I just laid out is just one way. Microsoft, very weak. Had this rising wedge, liquidation bar, follow-up liquidation bar, came down to this key 202.50 level, got a back touch of the declining 20 EMA, and then it failed. This was one instance where I was really surprised. It cut right through the 50 here in green on the daily chart, came down, never did anything. They never parked it on the 50. It's like it wasn't even there. So tomorrow on the daily chart, you can see this 202.50 had been an important line for quite a while, quite a number of days, couple of weeks. Right here, if you lose 202.50 tomorrow, I think you're coming into the mid 190s. And as we've discussed before, I think your ultimate target would be a back test of this original breakout at 190. And if there are any dipsters left, they're going to be right there waiting for that back test of the breakout. And way down the road, if 190 were to break, that would call into question this entire breakout and coming down here to test the 200 at 182.50. Again, notice RSI has broken significantly below 50. We've got a PPO bear cross and get really close to the zero line. Should this move into, below zero, then you're in full full bear mode once PPO goes bearish below the zero line. 60-minute chart, they undercut this 104 on the first run down. They tagged that today, closed it just above. If you're an active trader, I would be hitting this on a break of 204, and then you've got this 202 level that's important. That's where this found support the first time around. If it breaks the next time, I don't think this holds, and I think it comes down into this 200 area where there was some support before. So second time through, I think it has an easier time. Key off of 204 tomorrow. Google made a run into the gap and then it rolled over. It moved below this 1538 level and closed right at the prior low. tomorrow, if you're a Google person and you want to trade that, I would be keying off of this 1520. If it breaks there, you're going to this 1505 and seeing what happens there. I think there's easier trades than Google personally. But if you're comfortable with it and you kind of know how it acts and what it does, trade it. If they bounce it in the morning, this 1538 is your try for a short location. There's a big volume over price resistance there. If they kick it up, $10 or $15 up to this 1538, I would try to hit it there, and I think it rolls over. And if it doesn't, you got your stop just above, just in case you're wrong. Netflix. Talked about this at the mid-session update. This 495, 493 level. We had the run up to 505. That was a key place. Got rejected. Lost that low. Came down to 495. Lost that. I think this one's in trouble. I think the bulls would have liked to seen this close above this 485 level. I think you got downside down here to the 465, 467 area. I wouldn't be surprised if they try to kick it back in the morning to 485. If the market is in bounce mode, you might even see it come up to this 495 level. If that were the case, I would hit it there. I think that's a very nice, objective, low risk, high probability trade that fails. After all these touches and this resistance here, yeah, that would be a gift to get a kickback to 495, get the dipsters all excited, and then pull the rug out. But tomorrow, if they don't do that, if they don't manage a bounce and it opens lower, I think that's a hard trade to take. I think then you're kind of locked out because there's no objective level to shoot for. So if you're eyeing up Netflix, what you want to see is a kickback to one of these levels, either 485 or 495, to give yourself a good shot and a good line to shoot against. If it opens down here at 475 or something, I think you got to let it go. You just have not a lot to shoot at that point. So that's how I would trade that. Tesla actually did, let's see, it was actually up 1%, if that's right. Came down, 50 EMA, it held, they bounced it. They did come up here to the 20, which got rejected, but they held it in this channel. So at least on the daily time frame, they saved it. They've saved Tesla for the time being. I still think, I wouldn't be taking shots long, but they saved it. I would be looking for a break of this trend line in the days ahead. I think just like Apple, all the people that piled into the split, they're going to be motivated sellers. There were a lot of people trying to buy 400 calls for tomorrow. We'll see. I don't like Tesla long here, just because of all the split buyers that I think are feeling like they made a mistake and they're trapped. Look for a break of the trend line, and then a break of the 50 down here at 338. If that breaks, if the 50 breaks, then I think you got $50 of downside, honestly, from 330 to 280. I think that would happen quick. And then you'd have a decision to make right here. I would cover. If you got that move, I would cover that and then see what happens at 280. And then if they bounce it, I think that fails. And on the second run at 280, if that fails, you get short for a run down to 215 for a check of the 200. Notice this massive volume over price area. There's nothing there. That was during this, every day was up, this part of this parabolic move. There's nobody home if this breaks 280. And that is about as sure a thing as I could give you. Short 280 with a stop just above and look for the 200, because I think it's going to find that fast when and if all this stuff up here gets resolved to the downside. Last chart, 60-minute. I thought I told you at the mid-session update, short a break of 370. They took it down to 360 and closed strong. They recaptured it. That would have been a frustrating trade for anybody that took it. That kind of stuff happens. I was surprised by that. I thought that 370 failing, that it would, liquidate, move down, didn't do it. So there may be some strength there that I'm not seeing, that I'm kind of discounting. Tomorrow, if you're a bull in Tesla, 370 is your line. It closed above. That's support. It was support on the way down. It's support right now. They might try to gun it to 420 and close that gap. Can't discount that possibility. If the market is green tomorrow and they want to gun it off of the 50, I'm talking the Qs, you might get that move. You might get that move to fill the gap tomorrow when nobody was expecting it. So be ready for any eventuality. I think if 370 breaks tomorrow and the market's weak, you will get that. You will see that move to 330. So I wouldn't be afraid of either trade. My bias is down, so I'm not really a Tesla guy, but I would be a motivated seller on a break at 370. But if it doesn't break, you can be long against it, like I said, and look for that move up to 420 to fill the gap. Then the unfinished business will have been taken care of. If I saw that, and I saw that move to 420, I'm selling that. And if you get that move, my bias would be congratulate yourself and close it out, because I don't think that lasts if you do get that move. Okay, let's recap really quickly. I know it's been a longer video, but I think it warrants the extra time given where we're at, heading into a Friday and another weekend. We've got daily sell signals across the board on Apple, Microsoft, all the indexes for sure. We've got Facebook hanging by a thread. We've got Netflix on a sell signal. And keep in mind, what makes it significant is we haven't had any daily sell signals since the March low. Every little dip has been bought. I think the dipsters will remain resilient until they can't ignore what's happening. And the jury's still out. I mean, they could ramp it tomorrow and that's all she wrote. Or next week when the Fed has their meeting, they can announce, some massive stimulus package, and I wouldn't put it past them. I mean, they've done it every other time before. So we can't go bonkers here, go crazy, gonzo short. The bear case is building. We got to make the bulls prove that we're wrong. And the only way to do that is start recapturing levels from below. And if they can do that, then the dipsters win yet again. But I'm thinking there's more to go. I think the very shallow bounce that we saw that got rejected today gives more power to the bear case, because they couldn't even get it, they couldn't drive it higher. If they could have drove it higher, then the bears would really have to do some serious thinking that, the dipsters won again. But they couldn't do that. So tomorrow will be a very key day. Let's see what happens. And then tomorrow afternoon, we can reassess and see what we want to do into the weekend. I hope this whole analysis has helped you, even if it's been to step aside from some of your longs and protect those nice gains that you've had on the run up. I think protecting gains is just as important as, or maybe even more important than getting, the bear case right and getting short and all that kind of stuff. You don't want to just see that evaporate when the tide turns. So I hope the analysis over the last couple of weeks has, at a minimum, helped you manage your long portfolio and be positioned right, lighten up, take a look at those core holdings and see what you really want to hold. And if you're an active trader or even a position trader, take a couple of these shorts that have worked out really nice, and let's see if we can keep it going. Time will tell, and price will reveal all. So just respect price, and if it takes out a level, to the upside, cover your shorts. And if it takes a move down, roll and protect those gains. Roll down to a lower strike, stay short, make the bulls prove it. So let's wrap it up there. I hope you found the information and analysis helpful. If you're new to the channel, please subscribe. I'd really appreciate it. And give me a thumbs up. And also, if in your trading circle, pass the link along. It'll help me reach a wider base of people and hopefully help them as well. You can find links in the show notes for ways to subscribe to my content so you can get this information every single day right to your inbox. And also visit the blog where there's a lot of helpful information for aspiring traders at all levels. I'd really appreciate it. So this has been Chris Buss with Traders Profit Compass. Talk to you next time.